Once again to our university education, and today we're going to look at moving averages as part of our Equity Basics program. As always, just a reminder that past performance is not a guarantee of future results, that we are doing this for educational purposes, that one should practice trade, and that one should understand risk tolerance, loss tolerance, risk management, all of those important things before moving live into the markets. So let's look at what a moving average or rolling average is. In statistics, a moving average or moving mean, rolling mean, it just means that we're averaging out the price of the stock. And so it's a smoothing mechanism. If this were a 20 period moving average, it's basically taking the last 20 sessions and taking the closing price of each one and then giving you the average. And that's what that line represents, the average price of the stock over a certain quantity of periods. And so it's constantly moving forward because if this were a 20 period moving average, as you get a new candlestick the next day, a new price level, it gets rid of one of the old ones at lower levels. And so that price moves up. As the price begins to trend lower, it's going to pull that moving average down with it. Why? Because the average over that past number of days is starting to get lower and lower and lower. So it smooths out the price. Price might be kind of more erratic. The moving average just shows the average price over a certain quantity of periods, and it's a little smoother, a little slower to kind of react. In technical analysis, it can help us to identify a number of things. If the price is below the moving average, then it tells us that the stock is strong. It's above its average. In other words, buyers are aggressive. If the price is below the moving average, then it tells us that supply or selling pressure is aggressive and that it's downward trending. We can also identify crossovers in these moving averages, where the moving average, a shorter term moving average, crosses above or below the longer term, which would give us a buy signal or a sell signal. And we'll talk more about that in future classes. So it really gives us a sense of that supply and demand, whether the trend is strong, whether it's reversing, and key levels within that chart. Another thing is support and resistance. It can tell us where we would more likely want to be buyers. So if price is running higher and then it pulls back to the moving averages, that's usually kind of the entry area, the wholesale buying opportunity. When you're in a downtrend and you're trending below them, as it rebounds back up, often that's where you want to initiate a bearish trade to bet on it going lower and lower and lower, because in an uptrend, it will kind of bounce off of the moving averages higher. And in a downtrend, it will kind of bounce off of the moving averages lower and lower and lower. So we trade those trends. We want to use those moving averages for the wealth of information that they provide. Hope you've enjoyed this class on moving averages. We'll see you next time.